Okay.
Have you started? Okay, you started recording.
I just did. I just started it now. So now, like I said, tonight is going to be about patterns. So there's a lot of patterns in the market, a whole lot, but there are some that are more popular, or they happen most times than the other. Some are so that they happen so much that you can't even miss them. So I'm going to be paying attention tonight on those ones. So I'm going to be talking about the head and shoulder pattern, the double top, double bottom pattern, the triple top, triple bottom pattern, and then the inverted head and shoulder. And then I'm going to also do this. It is not a pattern, so to say, but then if we go by what is out there, we can call it a pattern. But the name, like I would say the name is not what is the most important. It's the use and how well you can profit from it. So this is another one that we call the bullish flag or the bearish flag. So I'm going to also talk about that. So we are going to be looking at them on a textbook kind of structure before we now come to the slide, the chart, to see them and then tell you the rules behind their trading, and then how I also trade them. And then if I can cite some on my chart, maybe previous trade or so, I will also point them out. So before we get into the whole work for tonight, let's check them out. Forex patterns. Okay, so let me start with this chart patterns. Let me start with I'm not sure if my favorite is head and shoulder, but I think I trade it very well and kind of quick to identify it. So maybe it will pass for a favorite. But then, like I don't have a favorite. My favorite is to make money. So it's only to make money. Okay, so let me start with this. The head and shoulder, like I said. Have everybody muted. So why am I still hearing? Why am I still hearing some noise? Okay, so now, hello. So please, wherever we're speaking, please just type it. The class has started already, and then. Okay, so let me just continue. So I said head and shoulder is the first we're going to be looking at. And then, so what is the root behind head and shoulder? The root behind head and shoulder is simple. For you to identify head and shoulder in the chart, it will most likely almost play out. I mean, it will most likely almost finish playing out before you can even identify it. And then, I'm trying to look for something more perfect than what I have currently. This is not really the way I want it to be. But let me just start with the most common pattern or patterns. Here you have it. The double top, double bottom, triple top, triple bottom. They are the most common. Look at this. So market goes all the way up. So I will explain it in two ways. So first one is this. Market goes all the way up, comes back to a little point, goes back to the point where it's retraced earlier, and then comes back to this point. So the trading of a thing, this is the rule of double top. You wait for this neckline, that is the point where you traced earlier, to get broken. And how do you know it is broken? I don't know if you've mentioned this to this class before. When I'm sure I must have done that anyway. It has to break and retest. That is when you can say it has been fully broken. So when this neckline is broken, we cannot say it's time to sell, because this is the entry, this is the target, that is the length where we are coming. Something not as long as the length anyway, just to be safe, the target. And then your stop loss will be above the neckline, because once it goes back to take out your stop loss, it's probably coming back here or going further. So that is the rule of the double top. And then similar to the rule of the double of the triple top as well. So the triple top, the only difference between the double top and the triple top is, while the double top has just two um, points, the triple top has 3 points. The triple top has 3 points. So let me don't worry, we will still see all of this in the chart. So I just wanted you to see what um, what it looks like. Now look at this. 1, 2, 3. This is the neckline. Something like this. This is the neckline. And then they say you have to wait for the neckline to be broken, and then you sell from there. But this is what I do. So as I'm speaking, I'll be telling you my own method of doing this thing. Now, this is a good trade, yes. But for me, it is a high risk. Why? Because if you enter your trade at the neckline, and then it goes back to touch that point, nobody says after 3 top we cannot form the 4th top or the 5th top. We can have 7 tops. So it's not a rule anywhere that has to be 3 or 4 or 2. So it can, after you've taken the trade, you think, okay, it has broken and retested, so market goes up back again. Maybe there's a news, anything can cause it. So let's not even list the causes. So, and it goes back, of course, between here and here, it must have taken out your stop loss. And then let's not say it comes back here, and then after that makes it final move. And most of the time, after this kind of consolidations up and down, the last move is always very quick and fast. And if you can catch it, it's always very rewarding. So really, so your stop loss taken out, and then now the market falls the way you are supposed to make money from. That is going to be a very sad story. So the question is, Peter, so what do you recommend? This is what I recommend. I prefer to take my trade from here. It reduces my risk. So even if I took it from here and I got here and I reversed, the worst that will happen is that maybe I've already made 20 pips. My trade has just gone 20 pips, and then it comes back. I'll come back to 0.0, and probably some 0. Probably some 5, maybe some pips against me again. But then I will know my stop loss is not yet challenging my stop loss, because my stop loss from here will be above this particular resistance, particular key level. So if it eventually takes out that particular SL, then I'm okay with the fact that this trade didn't go the way I want it to go, and I'm okay. I can surrender and let it go. But then for my SL to hit here and then it touches the resistance and then fall will be very disastrous. Nothing is as painful as the fact that you got the direction of the market, but you missed the entry. And then it could be very funny that trade took out your stop loss and still eventually went your way. I mean, it is very frustrating. And then that could get people to lose more money, because you might, if you have not mastered your emotions well, you might get into revenge trading. Just enter the market anyhow, just because you want to revenge your money, you want to make your money back and all of that. And before you know what is happening, market know how to deal with revenge traders. Your money will just keep going on to you finally blow the account. So I hope you understand what I'm talking about in terms of the bottoms and the tops. So the only difference between the triple top and the triple bottom is that the triple top is at a resistance and the triple bottom is at a support. You know what that means, right? Just turn this upside down and then you have the triple top. The same rule, the same system. So this is an example from a chart. Now look at this. 1, 2, 3. And what did you have next? So some people will say, it has started selling, and then you enter here, market goes back and hit your stop loss. That's why I said after a test and a retest, after it has been broken and retested rather. So look at this. It came down, tested. So for me and my people, we enter here after the retest, and then we sell all the way down to wherever we are going. But then look at it. So if this is not where we were going, if let's say we were going is somewhere here, after it touched here, it went back up again. Now, even though you've seen 20 or 50 pips gain again, and then now it has reduced 0.0, at least you are not losing anything. Unlike you having your stop loss somewhere here, and then it goes back and then take out your stop loss and still fall back again. It will be very painful and can lead you to revenge trading if you have not mastered your emotions well. So see what I'm talking about. So you can see a lot of example. I will still go to our chart and show, just want us to exhaust the things I want to show you here first. First, second, third, and then market falls, test and retest, and then we go there. So a whole lot. So that's for triple top. So the same rule apply with double top as well. But let me just for the sake of people that are just joining the class or so, let me explain the double top again before we go to the next. Like I said earlier, we are going to be dealing with the high probability ones, which are the double tops, the double triple tops, the head and shoulder, which other one did I mention? The ones with high probability, those are the ones we're going to be dealing with tonight. So the double top, let me quickly work it up again. And that's why I tell people, if you think paying for classes is ridiculous, you will have to learn your lesson the hard way. Look at it now. I'm showing you things from Google that that anybody can check out, and they will say, I've learned to. Oh, thank you for that. I didn't know I was muted. So I didn't know. Thank you. So can you all hear me? And I believe you can hear me again. So I already explained the double top, the double bottom, the triple top, the triple bottom. So let's move to something a little bit more better, the head and shoulder. Thank you. So the head and shoulder pattern, and let me also say this: double top, double bottom, triple top, triple bottom, head and shoulder, inverted head and shoulder. All these are reversal patterns. So what does reversal pattern mean? It means market has rallied up, now it's time to come down. The kind of pattern you look for at the exhaustion of the trend. This is these are the pattern you see when a trend is exhausted. That's what I mean. So this is an example of an exhaustion. Look at this: market rallied up, then printed an head and shoulder, a slanting one, and then fell. That's what I'm talking about. So that's what we call a reversal pattern. That is, after market have gone all the way up and it's time to reverse, and then it gives a pattern and then comes down. Look at this: went up, gave the pattern, came down. So it can also happen in the inverted format as well. Look at this: assume market came all the way from the up down and then give the pattern and then goes up again. So what is the rule of the head and shoulder? Now let me quickly tell you that the head and shoulder is a pattern that you trade at the last leg of it. So you can't say, you can't just see one thing and say, you can't see from here to here and say, it is head and shoulder that I want to form. No, you can never tell until it is almost done. That is, you can only guess it's head and shoulder when it's forming the second shoulder, and that's what we trade. So we trade second shoulder, and then the rule says you should wait for the break of the trend of the neckline. So this is first leg, hence here, retrace to the neckline, give a longer leg, which is the head. Our head is higher than our shoulders. That's what it means. And then comes back to the neckline. So everything is coming back to the neckline to show you that the neckline is a strong place and they are respecting it. Then the third movement goes to a height of the first one or almost of the same height and then comes back to the trend line. Now we wait for what? A break. And then how do you know a break? Break and retest, and then you can sell. So that's what the rule says. That is what the rule says. So what are we saying here? Let's look at a typical chart and see what I'm talking about. First shoulder, neckline, the head, neckline, the second shoulder, then neckline broken, neckline retested, then you sell, and then you buy. It's an inverted one, then you buy. Hope you understand. Let me go over it again. First shoulder, back to the neckline, the head, back to the neckline, second shoulder, then neckline broken, neckline retested, then a buy all the way to your target. So that's simple. That's simple. So the question is, Peter, how do you trade your own head and shoulder or inverted head and shoulder? Now you can trade whichever one is convenient or easy for you or better for you, but this is how I trade mine. I trade it this way, maybe because I've interacted with this pattern for a long time or so. I can cite if it's going to be a head and shoulder or not from the second. I'm not going to wait for the second shoulder to form to the neckline. I'm going to take my trade from the second shoulder, especially if I have other confluence. So I take my trade here, and then I do something very strategic. What is that thing? I take my stop loss to be above this head. What does that mean? And why do I do that? Now, this is it. If what I'm taking is a little bit more not certain, because it might eventually not be an head and shoulder, it might eventually be a double top, a double bottom in this case. It might not retrace here, it might come all the way to the head to retrace, because this is a resistance, this is a support. So I put my stop loss above or below it, such that if it eventually comes to form a double bottom, I will still be in trade. It will not trigger my stop loss and then eventually still make money from it. You get my point? So that's why I trade it that way. But then it depends on what works for you. And then it will be sweet if you can, if you have good confidence, take from the head, enter another one here, enter another one, three entries, and then you make your money. But it's not always that easy. So don't push yourself too hard. Wait for the break of the neckline and hit the free money. So if you can do the second shoulder, good. But then once the neckline is broken, the rest is easy. So that's it. So the same rule that apply for the inverted also apply for the original head and shoulder. So head and shoulder or inverted head and shoulder. So the another thing is this: does it have to be a straight line to be the neckline? No. From the examples you are seeing, you can see that this is not straight. This is slanted. The one I gave the other time is slanted. See, even this also slanted. So you don't have to say it's not a slanted looking like this one. Look at this. This is straight. The neckline is straight line. So it is not a hard and fast rule that it has to be a straight line to be the neckline. So you just have to know it won't always come out perfect. So you just need to know how to identify it quickly and easy enough. Look at this also. Now, this is an established key level. You can see how market has been tracing from there and then now broken to form a shoulder, came to retest, form a head, came to retest, form another shoulder, and then now. So look at this. If you had entered here, you will have been stopped out. Why? Because it's a fake breakout. Now, this might not eventually be traded. So what am I saying? Until this is broken and retested, you know you're not supposed to trade this. And that's why I prefer to take my trade from the shoulder because I will have made some money here and probably get out and go for another trade. But that's just my own method. It might not work for you. So this is a simpler way. The neck, the left shoulder, the head, the right shoulder. Then you wait for the break, you test, then you sell or buy to your target. Simple enough? I believe so. So which pattern is the next? Which pattern is the next? Continuation pattern. So we've spoken about reversal pattern. The next thing is continuation pattern. So let's look at one of the most popular continuation pattern. It's called the bullish flag. The bullish flag. It happens almost every time. And then let me also use this medium to state a generalization. Now, most of the consolidation you see in the market charts, and when I say most, let me put a caution to that. The word most means some 65, 67, 70%. Now, so it's not total 100%. So most consolidation, when they eventually break out, they break out to continue the trend that led to that consolidation. You know, I already said in the last class or probably the previous classes that it is easier for a chart to proceed the trend it's coming from than to change. So what am I saying in a simple word? I'm saying that it's easier for an uptrend to continue than for it to reverse into a downtrend. And it's easier for a downtrend to continue than to change and goes uptrend. It requires a lot of effort to change the direction of a trend. So it is easier, continuation is easier than what? Than reversal. So look at this. You could have it anywhere. So you don't have to start counting how many up and down in the. So just know that when you have a consolidation, look at this. Bullish consolidation. There you are. See, so you can see why we call it a flag now. This is the pole, this is the clothes, and then it goes all the way up. Same thing with bearish flag, the pole, the bar, come down. So now what I do is, of course, I really don't trade it with high lots because there's been a lot of issues come up with this. But then once you are able to master trading breakouts, you make money from this place. Now, so the question is, how do you trade it? So let me quickly give an example to that. Should we use this? Now, How do you trade this? The rule says you should wait for the breakout and then you test and then you buy. But what I say is that it is more profitable and less risky, because now if you buy here after the break, for your stop loss to be valid for this structure, you have to put it below the flag, below this point, and then that might be a high stop loss, meaning that if it eventually hits, you will lose a lot of money. So for me, I would rather take my trade from here, knowing that this is the lowest level on, on the consolidation. So I'll probably put it within. So getting here, I've made some 10, 15 pips already. And then if it breaks out, cool. If it doesn't break out, I take my money and I use it to buy granite, whatever it buys. I mean, at least I'm not losing money. Do you understand the point? So to buy here or to take the trade here and put your stop loss here is increasing your risk. So, and you understand our risk to reward discussion. It's one of the most important things. So that's it. So it could be a consolidation like this, or it could be a triangle like this. So it could be a triangle like this. So it doesn't really. What you should pay attention to is the fact that, where's this thing again? Okay. What you should pay attention to is the fact that the pull, the consolidation, the breakout. That's all. The pull, the consolidation, the breakout. So let's now go to our charts and check some things out. So now you can start dropping your question while I try to show what we can see in our chart. So let me start showing you from the one we traded 2-3 weeks ago. I think it's on HEU. Is it HEU? Not so sure. Yes, it's EU. Yes. So let me hide this a little bit. I will show you later. Now look at this. And then even in this, I can show you different things. But let me start with so I'm gonna zoom. Yes, here we are. Look at this. See the head, see the first shoulder, see the second shoulder. See the second shoulder here, and then this is the neckline. You can see that there were a lot of candles here because it was not just a walkthrough. And then once it's broken, but then for the people that knew when I dropped this trade, I said we should sell from here, from the second shoulder. So for a few days, this is a daily chart. So we started selling from here. So we sold for how many days? 1, 2, 3, 4. I mean, we just kept selling anyway until we got to the 100.0. Now, so how did I get to know of this? Just put all of them together. For me to take that trade, there were 3 things. One, there's a stronger trend downwards, this trend line, one, meaning that no matter what, we are still going down. Secondly, this is bearish flag. Now, look at this flag. You can see what I'm saying, that there's a lot of things in this. So look at this flag. So we know that at some point it's going to fall. So that's true, right? Second and thirdly, I drew my Fibonacci, and then the second shoulder fell exactly at 30.2, which is a wicked form of retracement. So that's third, right? So what was the fourth one? I don't think I can, but I know we had good confidence to make this trade happen, and there we are. It played out nicely. I mean, one of the best trades for January. So that's that. So how do you train your eyes to see patterns? It is by use. There's no other way. I'm expecting your questions, please. There's no other way. Look at this. I can see head and shoulder here. I don't know if you can see it. Look at this. This is the head, first shoulder, second shoulder. Imagine selling from here. And this is your target. Good money. Of course, you could wait till you get here before you sell, because this is the neckline. And then you sell all the way down to this point. Still 94 pips. Good money as well. But then from what I said, you can as well pick your money from this point. I mean, this point right here, from the left shoulder, from the second shoulder, and then make good money. And then if you have drawn your zone, you know that it will not end here if you touch here, because this is where the zones are. This is where the powerful zone is waiting for you. Cool money. So let's do for other patterns in other charts, and waiting for your questions. Looking for other patterns. Now I have something to show you. Look at this. First top, second top, double top, a 4. You see that? I'm sure you do. So each other one, so this might not be straight, but so it's a, look at this. First, second, third, fourth. I love something like this. And then you can see the 4 was so drastic. Like I was saying, why I don't like trading this kind of pattern from the neckline. Look at this. After this fourth, it came down like powerfully. The point that it has to pull back immediately from here. So each other one, let's look for more of it. Let's look for more. Look at this, double top, and then you fall after it. Look at this, triple top, triple bottom, and then you rise after it. You can see they are reversal patterns. In fact, those are the most popular. The tops and the bottoms are very popular. I mean, so common. Look at this, 1, 2, down. So it is high probability trade, especially if you have them on a key level, a very strong key level. In fact, you have a good trade for the day. Look at it, even on the trend, it played out. First, second, and market dropped. First, second. So we can likely, anytime from now, we should see this also drop, because first, second, third, it's gonna drop. So if we drop if you are drawn our this thing there, let me see. This looks like head and shoulder, inverted head and shoulder to me. Look at this. This is the head. Shoulder 1, shoulder 2. Where's the neckline? We can't even find it. Somewhere here, right? But then it bought anyway, so play that. Like I said, it's not always be perfect. So which time frame is best to see this pattern? Depends on the time frame you trade. But the higher the time frame, the stronger the patterns. Like generally, the higher the time frame, the stronger whatever it is you are seeing. Either you are looking for patterns or you are looking for any other thing. So I prefer you do it on H4, D1. D1 might be too big, but then you can stay on H4 for something good, especially as a daily trader, as a day trader. Stay on H4. If you go to 15 minutes to look for pattern, it will disappear in no time. So H4, good. H4 is good. Any other question, please? So let's put down our question. Let's drop our question. The class will end in 7 minutes. So let me know if I have to raise another Zoom meeting or not. So if you can answer our question in this class, that will be the end of the class today. And then I will upload the video for you to watch over and over again to master it. But then if you have more questions, we'll have to do another class. We'll have to raise another Zoom meeting and continue. So 1, 2, 3, and then it's bye. So we have diverse examples, a whole lot of examples. You can see them. Now all the things I'm showing you their money, so I could have made so much money from this, because I mean, I've done all of this before this market started falling. But then you can't make all the money in the market. You can't trade all your setups. And that's why I try as much as possible to share some. Now, thank you for this class. I finally saw what I've been looking for. I've been waiting for this thing to hit here. I missed the entry here, and I didn't want to jump on it. So I said I was going to wait for it to touch here, and now it has touched. Now I saw it. Now I have a game to play on Monday. I mean, look at this. Awesome. I'm waiting for it. Monday come quickly, and then we hit it. We hit it hard. So let me not forget what I'm doing. So yes, I already explained that the rule to triple or double top is to trade from the leg line. But I said that what I prefer to do, let me do for an example so that I can. What I prefer to do, where's the example? Okay, let me use as an example. So let's take this for a double top. So same thing with triple top, either double or triple is just the number of top that differs. So this is probably the neckline of this particular double top. So the rule says you should trade it from here. You should wait for the break of the neckline, then you trade it. I'm saying that I don't like that because if you reverse and take out your stop loss, you get depressed. You want to do revenge trading, you miss your money, you lose more money, and all of that. But I prefer to take the trade from the top like this, and then my stop loss is going to be somewhere higher, and then I'm going to be safer before. So if you decide to create thousands of tops, I'm still safe. Okay, so I'm still safe. If you decide to create more patterns, either more tops, I'm still safe if my stop loss is above the point here. So that's what I'm saying. Did I answer your question, sir? So if you don't get everything, I understand. It's okay. And that's why I'm recording so that you can watch over and over again. And I ask your question on the chat and we can discuss over the weekend. So now look at this. This is supposed to have dropped since, but it's forming tops. So we are not arguing. I'm not even concerned. I know it will drop and we will make money off it. See, it's giving us a valid setup. Look at this 1, 2, 3, 1, 2, 3. So it's telling us this is a key level. So a good trader will wait for this to break and then we make the money. Or you can trade between here and here. It's that simple. So let this get here, sell it down to this point, or let this break, sell it down, whichever one. Cool money either ways. Okay, okay. I guess it was the network that affected the audio, but I just hope it's going to play out well in the video, in the recorded version of it. So, any other question? Any other question? So, if there's no other question, permit me to end the class. So I would upload as soon as I will drop the link as soon as I upload, and then we can watch over and over again so that you can ask your question and truly understand this. Thank you so much for coming to class today. We meet again tomorrow.